Hi everyone, today we're diving into the latest developments from the Bank of Japan and their potential move that have global markets on the edge of their seats. Stick around because we're unpacking what the BOJ governor's recent remarks really mean for interest rates, the yen, inflation and market sentiment. Next week, the Bank of Japan will decide whether to maintain its short-term interest rate at 0.25%, marking 4 consecutive meetings of no change. But this time, there's a twist. While a hold seems likely, the central bank is expected to offer strong hints, possibly pointing to a rate hike as soon as January. Governor 𝖢𝖣yiِ recently dropped a big hint, saying that the timing of the next hike is approaching. Translation of this, the BOJ is inching closer to moving away from its prolonged ultra-loose monetary policy. But could it happen sooner than January? A December hike isn't entirely off the table. However, follow-up comments from 𝖢𝖣yiِ suggest a cautious approach. Why? One reason is lingering uncertainty around the new tariffs announced by former US President Trump, potentially throwing a wrench into Japan's economic recovery. Two big factors are shaping this debate: inflation dynamics and economic resilience. So let's break that down. In October, Japan's base salary growth hit a 32-year high of 2.7%. Couple this with Tokyo's November CPI numbers, and it's clear inflation pressures are heating up. Headline inflation jumped to 2.6% year on year, up from 1.8%, and core inflation, which strips out volatile items, followed a very similar trend. And it's not just about inflation. Japan's economy is holding its ground, with Q3 GDP growing 1.2% annualized, exceeding forecasts and marking 2 straight quarters of positive growth. So what can we actually expect from next week? Well, it's a toss-up between a hawkish hold and a dovish hike. If they decide to stay put, you can bet that they'll use forward guidance to prepare us for a January move. And if they hike now, we'll likely see soft language to ease market jitters. Let's take a look at the US dollar yen currency pair. After testing the lower support of 149.50, it's rebounded higher towards the resistance of 154. If this resistance breaks, we could see the US dollar yen price rise towards 156.50. A hold of the 154 handle could fuel a bearish reversal. So what do you think? Is a rate hike inevitable, or will global uncertainties keep the BOJ on pause? Share your thoughts in the comments down below. Please remember, this is not a trading signal nor trading advice. Please do your own research. Trading on margin is high risk.